Joining us right now to talk more about this is Bob Diamond. He's the CEO of Atlas Merchant Capital. He's also the former CEO of Barclays. And Bob, lay it on us. What do you think?
It's wild. Becky, I think this is profound. As profound an act of economic self-harm as I think I've seen in my lifetime, or at least in my career in financial services. 11% of the U.S. economy is imports. 40% of those imports aren't finished goods; they're parts. That gets confusing, but I think you would know what I mean when I say that has a big impact on the supply chain, because it gets very, very confusing. And if this is sustained or permanent, then it would require pretty massive change in terms of the supply chain. So I think the impact is huge. 11% of our economy is like 3.3 trillion. That's the imports. And when we look at other periods, people point to 1930. At that point, imports were, I think, around 3 or 3.5% of the economy.
Before Smoot-Hawley.
It's profound,
yeah.
And it's self-imposed.
We already have heard this morning that Jaguar and Land Rover is halting imports for now to the United States, even though it's the second biggest market. I think a lot of confusion about what the end goal is, what the end game. And the latest rhetoric we've been hearing from the president himself, both in his post on Truth Social this morning and what he said last night on Air Force One, makes it sound like this is not as much of a negotiation, that he sees this as a permanent structural change. If it is a negotiation and they were to come up with something, let's say, this week, would the damage be undone?
I think you can undo the economic damage. I think this can and should be dialed back. When you look at the levels prior to the first inauguration of President Trump, tariffs were like between 2 and 3%. Mm-hmm. It's really hard to get exactly where they are now, but they're probably, with these moves, 22, 23, 24%. So that's a massive increase in the amount of tariffs. And I think they do need to be wound back. The last time I was on, we talked a little bit about tariffs being used for economic reasons, maybe to balance, make trade more fair, where it's adjusting.
The president would say that's exactly what he's doing.
Yeah. Well, it doesn't seem to be at all. And I think many people have pointed to the equations or the math or the calculus or whatever it was to use. Frankly, it looked like amateur hour. The impact of that on smaller countries versus larger countries, or real trading partners versus, those that don't really have the money the dollars to invest in the U.S. So it didn't seem logical to me. And I think we've moved beyond the economic reasons that are justifiable for using tariffs into something that is non-economic. And I think the impact on our friends and our allies, Canada is probably the best example, that's going to be a lot harder to unwind. Can we unwind the economic impacts? Sure. I think we should move quickly and do that.
Stan Druckenmiller, we were just talking about his post on X overnight, just saying that he's not in favor of tariffs above 10%. You sound like you fall in that camp.
Yeah. Well, I wasn't smart enough to pick out that number, but I go back to, one of the things I researched during this period is where were tariffs prior to the first Trump administration, or prior to this administration, inauguration. And it was about 2.5%. And they're now about 22, 23, 24%. On 11% of the economy, that's a tax bill of $700 billion immediately. That's going to have an impact on prices going up, production going down. It calls into question whether we're going to have stagflation, which is where no one wants to go.
Yeah, and I think that's the big question. Pain in the stock market is one thing. When does that translate into actual pain in the economy? Does something break? It's been orderly to this point. Steep, but orderly. But what do you watch for to see that moving into the broader economy? We did have a flash CEO survey that we completed with CNBC with a group of CEOs who are on our council. And I think a third of them said that they now envision that they might have to lay people off this year.
Look, the Fed's in a in a tough spot. And I saw the piece that you posted just before I came on, President Trump saying that we should lower interest rates. You know, the Fed has rates now at about 4.25. The markets are discounting 3 or 4 cuts this year.
I think it's 5 now, actually.
It's probably moving this morning, right?
Yeah, as of Friday after the jobs report.
But it's a tough job for the chairman because you cut rates and inflation starts going up, and the impact of the tariffs on inflation is real. So they have an inflation, and they also have a debt level that all of us say is the darkest cloud hanging over the U.S. economy. Now, you guys know from my times here, no one's more bullish on the U.S. economy, the resilience of the U.S. economy. But this is a very profound act of economic self-harm. And the question I ask is which Americans are benefiting from this right now? I don't see it.